I'm Carissa Chappelle at REIT Week in New York, and joining me today is Paul Curbo, Portfolio Manager with Invesco. What is one trend impacting the industry today that's not getting the attention that you feel it deserves?
I think cap rate compression. I think cap rates are actually far lower than some analyst estimates. If you look at the apartment sector, we have information and data suggesting that cap rates are in the 4 to 5% range for major markets. So we think that in some cases on the West Coast, cap rates are actually below 4%. So a company like Avalon Bay in the apartment sector, who has a significant development pipeline, about $1.5 billion, that's yielding close to 7%, we think that's a tremendous amount of value creation that many analysts are not really including in their estimates because they're using cap rates that are a little bit higher than we think where the market is today.
What sector has seen the biggest improvement in fundamentals over the past year?
Well, I talked about the apartment sector, but I think if you look more broadly, I think across the West Coast, we're seeing pretty significant improvement. So if you look at the office sector, specifically in the San Francisco Bay Area market, that's been one of the strongest markets. And specifically, kind of the internet and social media companies in the South of Market submarket, rents are up 20% in the past year. They're up 50% since the trough in 2009. And so that's an area we're seeing tremendous growth. A company like Kilroy, who has a growing presence in the San Francisco Bay Area market, is seeing 7 to 8% same-store net operating income growth over the last year.
Tell me, how do you advise your clients to protect their money in all market environments, regardless of how the market's performing?
Yeah, it's a difficult assignment because our job is really to provide performance relative to a benchmark, and so we're going to be somewhat beholden to how the benchmark is performing. What we'd like to do is create a portfolio of companies that can withstand a market downturn or a capital markets disruption, actually use those events to their advantage. But we also have a part of our business and part of our funds that do invest across the capital structure, so not only REIT equities, but REIT preferreds, corporate debt, commercial mortgage-backed securities. And so by being able to invest all through the capital structure, there are times in this environment of risk on, risk off, where maybe it is a little more volatile environment, that you can invest higher up in the capital structure and provide a little bit more security and a little bit better, less volatile return in that kind of environment.
Thank you so much for joining me.
Thank you.
I'm Carissa Chappelle for REIT.com.